Hello, everyone. My name is Yana Kropova-Harris, and I'm one of the hosts at the Eurovision Home Spring Edition in March. Together with the property guides, Eurovision Home have been helping property buyers for over 10 years now, and from continually issuing the buying advice, sourcing local news, we are also able to help you on a one-to-one basis with a UK-based English-speaking call centre. So if you are on a journey of looking to buy or move to Spain, please feel free to contact us at any time, speak to any of our exhibitors today, and or follow up on on-demand sessions, and we will be able to help you. What we do really well is being able to introduce you to experts like my guest speaker today, who is Quentin from Chase Buchanan, who is actually an expert on financial advice when moving to Spain. At all the time today, you can ask a live question by pressing the Q&A button at the Zoom call, and this question will be then sent to me, and I will ask these as many as I can to Quentin today. So what I asked Quentin to do today, to give us a broad overview of the taxes in Spain. Let's start with them, and then you know, I've spoken with him before, and it's quite difficult to be as precise with Spanish taxes as you are able to be in other countries, purely because Spain is very regionalized, and all of the taxes are actually down to regions administration. So what he's done is actually gave us an overview in a short presentation, and then we will open the floor to the questions. We have many questions being emailed to us prior to the event, so thank you very much for joining. If you emailed us a question, I will ask Quentin these questions today. But if your questions doesn't get answered, Chase Buchanan and the team are live at the stand until 4 p.m. You can find them in the Spain hall, and you can go and ask the expert button, press that button, or a chat button to ask them a question. I believe they were really busy this morning, still quite busy this afternoon. So without further ado, Quentin, tell us a little bit about yourself, and please share the information that you've prepared for today. It is a very technical subject, so it's very good to have some visual reference points, and I'll let you take the floor away. Thank you.
Okay, Jana, thanks for the introduction. Good afternoon, everybody. Let me just share my screen with you. So, yeah, my name is Quentin Seller. I've been working in financial services now for 22 years, so really all of this century. Based in Spain for over 18 of those years. My wife and I moved across with our two younger children who went to school over here. And I can honestly say that I don't really want to live anywhere else. Because I've been here for so long, I do know the system pretty well. I understand that there are opportunities, but there are also pitfalls. So as Jana was saying, what I want to do today is really just give you an overview into the general tax system in Spain. She mentioned again that it is regionalized, so I've got some examples from Andalusia where I live. But if you've got any questions afterwards, then just go into the Q&A or the chat box during this seminar, or indeed I'll be back into the Chase Buchanan chat box or Chase Buchanan booth once I've completed it. So let me just start with clarifying a couple of things. The tax year in Spain is a calendar year. Now, the Spanish tax authorities will deem you to be a tax resident here if either you spend more than 183 days in a calendar year, if your center of economic interest is in Spain, so your business is in Spain or your job's in Spain, or indeed your dependent spouse or children are living here. So we have a lot of clients who are offshore workers working in the oil industry, but their family are based here, the children go to school here. So the Spanish tax authorities will deem you to be a Spanish tax resident. And what that means is that your fiscal obligations are, first of all, you need to complete a Modelo 720, which is a declaration of overseas assets, so anything that's outside of Spain, and that's split into 3 areas, and I'll go into that in a bit more detail in a second. You will pay income tax on your worldwide earnings, so wherever you earn from anywhere, it'll be taxable in Spain. There are dual taxation agreements with different countries which can mitigate some of those taxes, so generally you will not pay tax twice. It's changed a bit since Brexit. It's slightly more complicated, but again, don't worry, you won't pay tax twice. You'll also be liable for Spanish capital gains tax on the sale of any investment or property. We also have wealth tax here, and the inheritance tax system and indeed gift tax system are completely different to anything you've experienced in the UK. So let's start with Modelo 720. By the 31st of March in the following year, you need to make a report of any asset you've got outside of Spain that is valued over 50,000 euros. These Modelo 720 submissions are individual, but if you have a joint account with somebody or you own property in a joint way, then you declare the full value, you both declare the full value, but also then the percentage of your ownership. So you need to look at overseas bank accounts, where you're either the account holder, beneficiary, or even if you've got signatory or power of disposal of those accounts. You need to declare any financial assets like shares, bond, unit trusts, life insurance policies, annuities, and also any property held overseas and the right to that property. So either if you own timeshare or what we call usufruct, so that is if the property may be in somebody else's name, but you have the right to live there. So in some ways it's your asset because you have an opportunity to sell that asset and have a gain from it. Income tax is the main one, known as IRPF to keep it simple. And that again is, as I said a second ago, is payable on worldwide income. The rates are different for general income and savings income or capital gains. It varies by region. So there's a state element payable to the Madrid government and also a regional element which you pay in one go, but it's a local rate that is applied. And that must be paid by the 30th of June in the year following the tax year. So 2021 taxes need to be paid by the end of June this year. Income tax rates, these are generalized. As I said, and I will keep on saying, each region treats things differently, but more or less, then these are the rates that people will pay. So starting at 19,000 euros, sorry, 19% on up to 12,450 euros, and then rising to over 47% if it's more than 300,000 euros. And again, they're individual. There are allowances, and there are quite a lot of allowances. But again, that can vary per region, so I won't go into them in detail this afternoon. Income from savings and capital gains. There are 4 bands that's clear in front of you, but it goes from 19% up to 26%. And these are payable on the sale of, or the gain of any assets, the sale of property, interest received from UK tax vehicles, which again, I'll cover in a bit more detail in a minute. But it's fairly simple. So the way it works is that you'll look at your general income, and that will be on a sliding scale. You'll then look at your savings income or capital gains on another sliding scale. You put the two together, and that's the tax that you'll pay. We also have a thing called wealth tax, where again, determined by regions, it's paid on a sliding scale up to now 2.5%. If you're worth more than 10.7 million euros. You have a personal allowance of 700,000 euros, and that is applicable to residents and non-residents. And then if you're living here, you have a main home allowance of up to 300,000 euros per person. This is a really complex one, and the one that most people fall foul of. In the UK, it's really simple. On first death between spouses, there's no tax liability. And on second death, you have a combined allowance of £650,000, plus possibly a property element that is deducted from the estate inheritance tax liability. The estate then pays that before it's distributed to the beneficiaries. Okay, that's the UK. In Spain, any inheritance is paid by the beneficiary not the estate, and it must be paid before the beneficiary inherits the asset. It's on a sliding scale, and it's also determined, there's a factor that they multiply the base rate by, depending on the kinship group of the beneficiary to the person that's died. Excuse me. The rates vary from 7% up to, it can be up to 26%, and that's how they work out the base rate of the tax liability. And this is the factor that is now really important, the kinship group. So if you're a direct line descendant or ascendant of the person that dies, so the person you're inheriting from, then you will pay the standard rate. If you're in group 3, which is siblings, aunts, uncles, cousins, etc., then you'll be in group 3 and you'll pay 1.5 times the base rate in inheritance tax. And if you're in group 4, which is unrelated to the person that's left you the asset, then you will now pay 1.9 times what somebody's son or daughter or mother or father would pay. The biggest pitfall people fall into is if you're in a second marriage and you have unadopted stepchildren, they are not related to you. So it's very important to make sure all your finances and your wealth is structured in such a way that you can mitigate those taxes. The other thing I'll mention now quite quickly is that trusts are not recognized in Spain. So in simple terms, if you lived in the UK, you've had a financial advisor, everything could be structured absolutely perfectly, and then you come to Spain, which is wonderful, but you need to revisit everything, okay? You also need to make sure your Spanish will is correctly completed. Unlike the UK, where you can leave everything to your cat or your dog, Spain operates a forced heirship system, which means that 2/3 of your wealth must go to your children, and the other third you can leave to whoever you want to. But what you need to do if you want your estate to be distributed as you would have done in the UK is include a clause that states that you want your estate distributed under the laws of your country of birth. Okay, and this has been agreed under the EU Succession Directive, which is also known as Brussels 4. So if you have that clause in your will, then the Spanish authorities will recognize it and allow you to distribute your estate as you would like to, and not as they would force you to normally. So the pitfalls that people need to avoid, and we can do a lot about it. We can structure your savings, your income, everything to mitigate these taxes. But if you're coming from the UK, what you're used to is things like ISAs, national savings and income products, premium bonds. All these vehicles that grow tax-free in the UK are taxable in Spain. If you hold an offshore bond in, let's say, the Isle of Man or the Channel Islands, it will not be Spanish compliant, and you will not get the same tax benefits as you do as a UK tax resident. And if it is in one of the black listed countries, then you will automatically be taxed at 50% of the policy value every single year, whether you take money out or not. You will also be taxed if you do take money out, and it'll be taxed as income. The sale of the UK property will also attract Spanish capital gains tax. The way they think is that if you've been here for more than 183 days in a year, you're automatically deemed as being a Spanish tax resident, and therefore in that calendar year you have lived mainly in Spain, and therefore your UK property can no longer be your main residence. Okay. The other thing to be very, very careful about is that Spain do not recognize the tax-free lump sum with a pension, 25% pension commencement lump sum that your UK private pension will attract. All your income from pensions in Spain will be taxable as income tax. As I said a few minutes ago, Spain do not recognize trusts. So we need to have a conversation and look very carefully about how your wealth is structured. And then we can use the products that we have available here, like Spanish compliant products, to make sure that you're protected from some of these taxes that you weren't aware of before you moved across. So to summarize, the checklist is please talk to us before you make the move. Remember that although I've said a regulated financial advisor, since Brexit, UK financial advisors can no longer passport into the European Union. They also may not understand the full tax system or the systems in Spain. So just drop us a message, drop me an email, talk to us, and we can have a conversation to discuss your own personal situation and then how we can help. You need to fully understand the impacts. You need to review your savings and investment structures and your UK pensions, so you also know your options once you move overseas. And please, if you intend to sell your main residence in the UK before you come to Spain, or make sure you do it before you come to Spain, and that way you'll avoid the Spanish capital gains tax on that sale. The key date to remember in your minds is the 3rd of July, which is the 184th day of the year after the 1st of January. So make your move after that date. That's it. This the strap line at the top I actually borrowed from one of my colleagues. So we Jana's laughing because she did the webinar with Malcolm earlier on today. We all have to pay tax. That's a given. We don't like it. I'm Scottish. I really hate it. But there's no need to leave it at. So my contact details are here. I know that Jana's going to share them with you after the presentation as well. But yeah, drop me a WhatsApp mobile, email me at Chase Buchanan, or if you Google me, I have the probably fortunate position to be the only Quentin seller in the world. So you will find me quite easily.
That's handy. Thank you very much, Quentin. Really technical presentation that you've given us. I'm really glad you've done this overview because there are some very, very key takeaways and also a very helpful checklist. We have had questions emailed to us beforehand. Okay. If our live audience has any question, please use Q&A button. And while I'm asking some emailed questions over to us, I mean, I will try to anonymize them because what I have learned running tax and financial advice seminars for people looking to purchase property overseas, Spain, France, Portugal, you name it, is that financial and tax advice is tailored to personal circumstances of people. And that's why it's important that you speak to somebody before you commit to buying a property, because the difference of doing it before and after could be significant. And you might find yourself being liable for certain taxes. Malcolm, if you stop sharing, that people can see you in the
let me just bring that down.
Right, so there is a question about regional taxes. So Canary Islands, let's just look at that. I know you live in Andalusia, but I'm sure you have got some coverage or understanding of that. But inheritance tax in general in Canary Islands is the same what you've shown us on the screen?
The system tends to be the same. The allowances and the rates can be different wherever you live in Spain. So off the top of my head, I can't remember them all, but it's certainly something I can look at. And whoever's asking the question, if you give me their details, then I can find out the information for them and send it to them. Okay, that's no problem. But there is an inheritance tax that you explained the mechanics of it with the group. So we must be aware of that. And then also the clause of the will is applicable to anywhere in Spain, right? Yes. Okay, that's perfect. That's fine. That has helped us a lot. This particular view is talking about Lanzarote, and they have been actually told that the Canarian rules are very different, which kind of mirrors what you've been telling us. The regions are administering their taxes and collecting it in the way they want. So I think there is a conversation to be had on that. There's also a process of, I mean, you are a resident now in Spain yourself, are you? Yeah. What has changed after Brexit now?
when you're dealing with clients who are coming for residence?
Gosh, okay. I mean, the key thing now is that within the Schengen area, as a lot of people now know, that you can only visit the whole of Schengen for 90 days out of any 180 in a rolling period. If you fly to Spain, the clock starts ticking the minute you land in Spain. If you're driving through France, the clock will start ticking when you arrive in France. That's the key thing. The second thing, if you want to spend more than 90 days a year, then you have to apply for a visa. And there are two main types at the moment. One is what they call the non-lucrative visa. And there are certain things you've got to be able to declare and prove before you will be given one. Or you can apply for a golden visa, which means you've got to inherit, or sorry, not inherit, you've got to buy a property for more than 500,000 euros, or invest in Spanish investments for up to $1 million, or Spanish national debt for 2 million, all in euros.
Okay.
Most people we talk to tend to be looking at a non-lucrative visa. So that needs to be applied for through the Spanish embassy in the UK. Okay, and again, we have information about all these things on our website, or the documents that are available in our booth this afternoon.
Perfect. Talking about the lucrative visa, you just stolen one question from me, actually. We did have a question emailed over about actually going through a route of the non-lucrative visa scheme. But
Yep.
the question is, if I do this, what about my private pension? You know, if it amounts to approximately 140,000 pounds, can they take 25% from each tax-free? So they got two pensions particularly. So is there a 25%?
The pension question really has no relevance to the visa. With UK private pensions, Spain do not recognise the 25% tax-free lump sum. So if you're over the age of 55, depending on the scheme details, then go into drawdown, take that 25% before you become a Spanish tax resident. Otherwise, you will be taxed on it in Spain.
Okay, so yeah, exactly that. The question was, should I do it before? Should I take my 25% before or after I become a Spanish tax resident? So that's really, really clear and straightforward. Thank you very much. We've got a question about allowances on the personal work UK pension. My partner and I are civil partners, so not married. Does Spain recognise us as being married?
Not in so many words. In Spain, you can have what they call a brecha de hecho, which is you can register your relationship in the same way as you do a civil partnership in the UK, but it must be registered. If it's not, then they will not recognise it as being partners.
Okay, fantastic. That's great. In terms of the, and I had this question asked in many other financial planning surrounding the cross-border move. When should you speak to somebody like yourself? Is it before you found a property or after you bought a property and you started to apply for all of the residency, etc., etc.? Well, when is the best time?
Sooner rather than later, to be honest. The way I work with people who are living in the UK just now is that we can have a conversation. We'll go through their existing financial situation. I will then tell them how that will change or what we can do to, when they actually do come to Spain, but again, go over these points about pensions and property sales before they come across. So the minute you are granted your visa, if it's a non-lucrative or an NLV, the clock starts ticking. Okay, so really at the start of the process, talk to us, and then we can guide you through all the financial aspects of what you're doing.
Okay, and is there really a minimum amount? So we've got some people who only have a small pension. Yep. Is there a point in talking to somebody like that, even if you have a small pension?
Yeah, I talk to a lot of people, and being honest or being blunt about it, if I took everybody on as a client that I talked to, I wouldn't have enough time to do anything else. So the way I look at it is that I love living here. My role is to help people from a financial aspect. So I'm more than happy to ask or answer questions that anybody might have. And some may become clients, some may not become clients, but from my point of view, I was going to say I really don't mind. That's not true. I like clients, but yeah, there's no trying to think of the right words to put this. If they've got a question, just ask me the question. Okay,
Yeah.
Not a problem.
Don't be worried and don't be
Don't
scared.
be worried. Yeah.
Yeah, absolutely. I mean, I find myself in the situation where I feel like, is this relevant? And is the person going to think that this is not the right time to ask this question, etc.? So a lot of people do wait until they actually find a property and then they start engaging with the financial advice, which sometimes is quite late. And they should have done certain steps beforehand to prepare for this move. Can you please explain to us allowances on the personal private pensions? Are there any allowances?
Okay, we've all got individual tax allowances. Okay, the basic one annual fee is €5,500 a year. That's per person. It increases with age. And also if you've got any dependent children, then there are further allowances. So that allowance is offset against your general income, whether it's pension income, investment income, it doesn't really matter.
Yeah, that's a very European allowance system. So I am personally from Slovakia, and you've got the more kids you raise, you've got more allowance on your pension, and you know, your kids went to particular schools. So if you were in the army services in that particular country, you get different type of allowances as well. So I understand that this is very particular in country, varies from how it's done in the UK. So it's very important that people get the clarity on that. We had half an hour allocated and we are running out of time already. Okay. So I just wanted to summarize your quick takeaways that you've offered to us. So first of all, there is no allowance on your pension in Spain. That you can't claim your 25% once you're in Spain. Is that right? That's correct. So you should consider looking at your tax-free amount on the UK side before you become tax resident. Yeah, and it also is important to actually understand what your pension is, because if it's a final salary scheme or defined benefit scheme, then by taking the 25%, you automatically go into drawdown. Whereas if it's another kind of pension, you can take the lump somewhere in the UK, but just keep the rest where it is. Or indeed, we can look at what is the best solution for you, depending on right. A quick example is if you're living over here and you plan to be here for a long time, you may want to take your income in euros. So you can either do that every month and take the exchange rate hit by using some of the smart currencies who are, I've got to say, extremely good. I use them myself. Or you can transfer your pension into another solution that means you can actually have it invested in euros. So again, all these things are very personal. So it's all down to let's have that conversation and discuss what's best for the individual. Okay, perfect. Inheritance tax, really complicated because there is different recognition of the kinship. Gift tax as well exists. Again, if you don't understand, you have to plan for it. So really important to get that understanding of the liabilities you might have, or your family might have, or your extended family might have, should something happen to you. So really getting that planned ahead, or understanding it before you buy a property, is really important. Is there anything you would like to add to those who are looking to move and change their tax residency from the UK to Spain, apart from the fact that it's regionalized, so there are different variations to the taxes? No, it use the word complex. It's very true that the system here is a lot more complex than the UK, what people are used to. But as long as they understand it, we can uncomplicate it. Does that make sense? Yep. Okay. I mean, that's basically it, really. It's the important thing is to have the conversation. So that also, I feel like with everyone from Chase Buchanan, I run different country seminars with, it's one thing that I've spotted is there's no such thing like a stupid question right now. No, there's not. And
And
so if you are planning to do anything such big, you might do it once in your lifetime. Please speak to somebody. Chase are offering this advice for free upfront until you choose to become a client, which is really, really
Absolutely.
helpful for all of our Eurovisage home visitors and registered customers who wanted to attend today or are watching on demand. So please speak to Quentin as soon as you can. They are there on the stand live for a couple of hours, and if you don't manage to catch them or you have to be somewhere, you can always email to them and or us. So thank you very much. This was really, really helpful. I have learned a lot.
You're more than welcome.
Thank you for joining us today, Quentin, and everyone have a good day.
All right, bye-bye.